Ever worried about where you should be investing your money? Rightfully thrilling, both the stock market and the crypto market. Which one, however, would really fit you? Are you here for the adventure, or are you seeking consistency? Whether your goals are those amazing overnight gains or long-term development, we are about to dissect the actual distinctions between stock trading and cryptocurrency trading, so you may determine exactly where your money would be most suited for you. Stay around, since by the end of this video, you will know the advantages, the drawbacks, and most importantly, which road fits your objectives. All set to learn whether you lean stock strategist or crypto crusader? 1. Ease of access. Though there are several main distinctions, both stocks and cryptocurrencies are quite easy to get nowadays. All you need to invest in stocks is a brokerage account, open online via sites like Robinhood, E-Trade, or Charles Schwab. These systems are straightforward, and in minutes you might be purchasing Tesla or Apple shares. Usually traded on weekdays between 9:30 a.m. and 4 p.m. Eastern. Stocks are exchanged during regular hours, hence your trading chances are limited to these times. But crypto is always available, every day and every time. Trading Bitcoin, Ethereum, and other cryptocurrencies around the clock is made possible by sites such as Coinbase, Binance, or Kraken. Crypto markets do not close, so regardless of the time of day, you may react right away to market fluctuations. This provides some adaptability not available from stocks. Both are therefore simple to enter. But how about the entrance cost? Which one starts off cheaper? Stay tuned as we get into this next. 2. Entry cost. Starting small is easy with both stocks and cryptocurrencies. Fractional shares in the stock market have let anyone begin investing with as little as $5 or $10. Investing in a part of a company allows you to avoid having to pay $1,500 for one share of Amazon, a whole share of which is not necessary. This implies that you can diversify your portfolio even with a little sum of money. Regarding little investments, cryptocurrencies operate similarly. An entire Bitcoin, which runs thousands of dollars, is not something you should acquire. Buying cryptocurrencies like Bitcoin or Ethereum in fractions allows you to start investing simply a few dollars. You can start trading with little money, hence practically everyone can make a stock or crypto investments regardless of the value of 0.001 Bitcoin or a meager amount of Ethereum. Both markets are reasonably priced initially, but what about the hidden expenses? Would you run across any unanticipated trade fees? Let's examine deeper the costs associated in each market. 3. Fees for trading. Many platforms provide commission-free trading when you purchase stocks, so saving you money on purchasing or selling particular equities. Platforms like Robinhood and Webull, for instance, do not charge you for every trade you make, which simplifies starting an investment free from concern for your trades consuming your gains. For more sophisticated trading tools or for fund transfers, some minor fees could apply though. Still, crypto does not always behave the same way. Usually involving transaction fees, buying or selling cryptocurrencies can differ depending on the exchange. Purchasing Bitcoin via Coinbase, for example, may include a 1.5% fee on every transaction, which would rise depending on the payment method chosen. Furthermore, cryptocurrencies like Ethereum can have gas fees, which are expenses connected with network transaction processing. The degree of network activity will affect these gas fees. Therefore, even although equities may usually be traded commission-free, crypto usually has additional fees, especially for transfers or if you are moving coins across wallets. Fees are therefore absolutely something to give thought. But what about price movement? Regarding volatility, how do the markets stand? Stick with me to see why this is important. 4. Volatility. Among the main distinctions between stocks and cryptocurrencies is volatility. Price swings in the stock market usually are more modest and predictable. Stocks of reputable corporations like Apple or Coca-Cola hardly show significant price movements in one day. If you are a more conservative investor, a normal day might only see the market rise 1 or 2%, which can feel safer. But crypto is quite a different beast. In a single day, cryptocurrencies such as Bitcoin or Ethereum may climb or fall by 10% or more. For instance, Bitcoin can be recorded to leave $1,000 in a few hours. Although this crazy price fluctuation presents great opportunities for large gains, it also carries major hazards, particularly for traders unprepared for quick changes in price. If you enjoy steadiness, the stock market may seem more inviting. However, crypto could be an interesting choice if you're ready to accept more risk in search of a significant payoff. So crypto is rather more erratic. But given risk, how do these extreme price swings stack? Let us dissect it and examine in both markets risk against return. 5. Reward versus risk. Though their risks and rewards are distinct, both equities and cryptocurrencies have unique opportunities. Investing in stocks usually carries less risk, particularly with reputable companies. Though you're more likely to see consistent increase over time, you might not find dramatic increases like with cryptocurrencies. For long-term investors seeking a reliable and safe investment, stocks are therefore a perfect alternative. On the other hand, although the risk is obviously greater, crypto presents more possible benefits. Consider the large gains some early Bitcoin buyers achieved. You could either experience amazing gains or significant losses in a short period of time, since crypto values vary greatly. The volatility of cryptocurrencies means that despite the fact you can become wealthy rapidly, you might also lose a large amount of your money equally rapidly. Stocks are the safer investment for individuals seeking modest, consistent increase. However, crypto can be appealing to you if you're ready to tolerate more risks and want bigger returns. Long-term, equities appear safer, but could crypto possibly yield higher returns? Let's explore long-term investment possibilities and identify which one would be most suited for gradually creating wealth. 6. Prospectual long-term investment. Although both stocks and cryptocurrencies can be utilized for long-term investments, their perspective for expansion differs. Particularly blue-chip stocks, that is, those of big, dependable corporations, stocks have a long history of consistent increase over time. For instance, your investment in firms like Microsoft, Apple, or Amazon years ago would have witnessed an amazing increase. Over the long run, stocks like these have a track record of rising value. Many also pay regular income via dividends. By comparison, the long-run prospects of cryptocurrencies remain unknown. Although they have exhibited phenomenal increases in recent years, nobody knows exactly what the future holds, since cryptocurrencies are far more recent than equities. Furthermore, influencing its value could be changes in government policies or technology. Though it's still a speculative investment relative to stocks, crypto does offer enormous potential for growth. While stocks could be the way to go for a more safe, dependable investment, crypto could be the best option if you're ready to take on greater risk for maybe big gains. Although we have discussed the foundations of both markets, which one best fits your own trading approach? Do you hunt long-term growth, or are you more of a daily trader? Stay around to see which market is more suited for your taste. 7. Trading methodology and approach. Either stocks or crypto would be a better fit for you, depending in great part on your own trading approach. If you would want a more conventional method and concrete on long-term development, stocks may be your first choice. Those who are patient and base their judgments on strong fundamentals, such as earning reports and company growth on the stock market, usually find reward. Those who are focused on development over several years and do not wish to monitor their portfolio regularly would find this kind of approach most suited. Conversely, cryptocurrencies usually draw more aggressive traders seeking to profit on temporary price swings. The 24/7 trading atmosphere of cryptocurrencies can be more tempting if you prefer monitoring the markets, tracking price charts, and grabbing quick profits. You will probably have to keep more connected with cryptocurrencies as their volatility requires monitoring the markets to make appropriate selections. Thus, choosing between stocks and cryptocurrency depends on your trading approach. But are there any techniques that can enable you to control risk in both markets? Now, let's ask you this. Right now, are stocks or cryptocurrencies more of your interest for investments? Alternatively, both. Tell us why in the comments below. We would rather be interested in your ideas and experiences. Please remember to like the video and subscribe to our channel if you found this analysis to be useful. We have much more stuff like this heading your way. Via subscription, you will be the first to know when fresh videos release.